Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, March 6th, 2023. It's now the 4th. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 2 count. And to negate that for end of day on the 6th, there must be a close below 3970.15 for the price flip to the buy setup count 1. Price closed above the relative retracement up 1, still disqualified, and closed above the conversion line and is still below the baseline a little bit. And the outside bar call turned out well. Please see the video for Friday about that, but it was as perfect as it can get with the open lower than the low of this bar and the close higher than the high of this bar, so it doesn't get any better than that for outside bars. And usually you wait a couple of days, 1 or 2 days, to verify it, but in this case, I said in this day and age, you should just buy it if it goes higher, opens higher than this high here. And it certainly did, so we'll have to see what happens with that. There's going to be some resistance at the baseline, and prices at the top of the channel 3 high can exceed the channel 3 high and stay above it for a few bars, 3 to 5 bars max. And a tick higher Monday, higher than this high on the 3rd, will print the D wave down wave 2 and the D wave up wave B and the trend factor down 2, and disqualified sell TDST can become qualified. You can see yesterday's video for explanation of that. It's the same situation for Monday. And the ATM pullback alert, that's an indication of potential upside. And I've always noticed that it took about 3 or 4 bars for it to react. And it certainly did on the 4th bar here. And as we know in the weekly chart, there's an ATM pullback alert here for indication to the downside. And if that takes 3 or 4 bars, that means weeks. So here we have the first week, and the coming up week will be the second week. So let's see what happens with that. That's uncharted territory for me, just observing now. Back in the daily chart, I have lines turned back on, and we'll take a look at the closest one to the upside is this ongoing supply line, which for Monday will be at 4101.80, and it would have to open above that level for Monday morning. If it doesn't and subsequently moves upwards near it and then closes above it, this ongoing supply line will be disqualified. And if it becomes disqualified, then we'll think about going back down to the downside as a fading opportunity possibly. And the disqualified momentum up for 50% and 100% is there in that area also. Normally doesn't act as support and resistance, but in this case, with the supply line so close to it, it could be. Head south and it close under this ongoing demand line, which is at 3956.89 for Monday. So close underneath that end of day Monday will qualify this demand line. The NYAD top caller chart, we'll look at the NYAD to SPX ratio first, basically value versus growth, to see that there was an upwards trajectory tilted towards value. And on Friday, it looked like there was a skew to the downside, so tech and big growth was doing better than value, and there was a breach of this ascending triangle top line here, and then it came back down. So everything's been doing well with this upward trajectory and sideways movement too. And the New York AD line got around by its EMA 50 in green, went sideways near that for a while, and then shot up. It's well above its diamond pattern top line here that it broke out of back here in the beginning of 2023. I changed it from a descending broadening wedge just because I could make the triangle pattern. And the ratio adjusted McClellan breadth oscillator for the New York is almost to zero. It's at negative 4.30, so it had a nice bump up for the last couple days, Thursday and Friday. And the NYAD price looks like it wanted to nail this downtrend line from the peaks of the big W patterns and got near it and turned back up. It went above its EMA 10 in green and its 21 EMA in red. You can see that better in the thumbnail over here. And the ratio adjusted McClellan volume oscillator did make it above 0, 1.57. And the ratio adjusted summation index of the ratio adjusted McClellan breadth oscillator, it looks like it halted for a couple days around 408. And it did go under the green line here at 500, but will it look something like this where it went under and then back up for a nice run to the upside? We have to wait and see about that. Same thing with the ratio adjusted volume summation index of the ratio adjusted McClellan volume oscillator. It's faring a little worse. It's under 500 at 207.45. Could do the same thing though. And there was a nice mean reversion bounce for the RSI 14 right off of 40, just about, maybe a little bit under 40, and then shot up above its 21 EMA signal line and went above the equilibrium line at 50. And the on-balance volume recovered nicely after falling underneath this support and resistance trend line here in dashed red, mumbled around underneath it and then shot back above it. It's above its 21 EMA signal line, and that's a good sign. And the divergence between the New York AD line here and its McClellan breadth oscillator ratio adjusted panned out, where the breadth oscillator indicated upside to come and the AD line indicated downside. It was just too small to really take seriously, but it did pan out that way. However, the two live under that huge bearish divergence still, so the ratio adjusted McClellan breadth oscillator has to start hitting this arrow and moving it up to get an upwards trajectory, and we'll cancel that. And the intermediate term volume oscillator for the NYA, I'm trying to hold the cursor over here, and you can see it came down and just about nailed that area. So technically we're still living in a higher low. We have to give the tie goes to the runner, it looks like. And that would really be something if it can just continue heading up and stay away from getting under this low here. And the intermediate term breadth oscillator for the NYA fell below zero and looks like it wants to hook around. Its lower low would be the October low down here. It needs to stay above this low, though, would be a very good thing. And the instruments above their 200 period simple moving average in the NYA looks like we bounced from 60 just a little bit under and went back up into it. I like to see that. Let's see if we can just stay in there with some sideways action would be the best case scenario. The NYA monthly chart, we're going to focus on the indicators underneath this price up here. And since we last looked at this last week, the Coppock curve has continued going to the upside. It looked like it was going to fail and head to the downside, and now has somewhat rectified itself and is headed back up towards zero. Get back into this blue zone here first, and the PPO looks like it did nose above zero. It's at 0.295, so that's a good sign. And I'm wondering if the long-term KST up here is eventually going to make it down to zero just in time to turn around like this and head back up. And you can see that back here the Coppock curve and PPO did the same thing. This time the PPO and the Coppock curve is leading the way, so maybe it can avoid going down to zero here for the KST and then hook around, but we're still waiting for that to happen. The New York high-low index with the KSTs, we already know that the high-low index itself had this sell signal when the EMA 5 went under the 10 right here at this dotted blue line here. But we'll focus on the KSTs today. The short term looks like it's going sideways and wants to pull back on the stick and maybe head up. The intermediate term KST is just headed straight down and went under zero slightly, negative 18.07, and the long-term KST rolled over from the nosebleed section up here and went under its signal line. It's still well above zero, plenty of room to move to the downside, and there could be a short-term uptrend, as you can see with the short-term KST. Let's monitor that. I expect that to hook around and head up, and maybe it get above its signal line and still have these two pointed down. And the New York AD overbought, oversold indicator since last time we looked. I thought it might bounce off of this oversold zone, meaning the red 10 simple moving average, and head up, and it did exactly that. And the 30 EMA in green was mumbling, going sideways by zero right there, and now it's ticked up too. And the NASDAQ composite overbought, oversold indicator looks almost exactly the same as this one. The NDXT, big fat cap megatech index, shows that it executed the big M here to the downside, subsequently went back above the line here, and the level for the downside is right at the breakout here, so that would be the throwback. However, like I said, it did go back up, and it has to get above this 50% target, close above that. And that's also coincides with the DeMark relative retracement 0.382 level here. And now the diamond pattern looks like a fish with the tail. So now you can see in the big board, when we get over there, instead of the downtrend line, I started mentioning the uptrend trend line is the target to the downside. If it gets below the breakout area here of the diamond, if it continues down further, that would be the first level. And the US dollar with Merton Pring's dollar diffusion indicator is really struggling to get back up to zero. It's right underneath it at negative 2.95, and it wouldn't be unprecedented to get up above this 3 dashed green line and fall short of hitting zero and then rolling over like it did here in 2020. Looks like October or November of 2020, and another one over here in July or June of 2017. So we'll have to monitor that. And the dollar is kind of going sideways. It had that spike up, and now it's just going up and down sideways here, so something to watch out for there. And the FXY to UUP relative performance ratio, that's the yen versus the dollar. You can see I had to create an ad hoc rung down here for the Andrews pitchfork and another one to the top to make it look right. So now we have 4 of them. And I had to do that because the yen was sinking so low, and when it hit this, we entered long into the yen and exited the yen when it hit its 65 EMA for this weekly chart, and it's headed down, went back below this tine of the fork here, and it looks like it's hooking back around. But the short-term KST that you can see is rolled over from the nosebleed section and went down. The intermediate term KST is still pointed up. It's above zero. Looks like it wants to roll over eventually, but the long-term KST from the seller has turned around but has yet to go above its signal line there. So for the short term, the yen might sink a bit. We got the new Fed chair over there replacing old stick-in-the-mud Kuroda, and he's going to be very cautious and still maintain some accommodativeness there. So let's see what happens here if this long-term KST can get above its signal line, which it will eventually, but it just depends on when. And that day is not today. The S&P 500 support and resistance levels big board chart shows the lone gray area at the downtrend line from 06/03/2021, and the close of the aftermarket hours for the S&P 500 on Friday level was 4048, so 4048. So to the downside is the weekly 65 simple moving average, the 21 EMA, S1, and the pivot point. And to the upside, that starts at the 20 simple moving average, then the daily baseline, daily horizontal support from 04/07/2021 and R1. Both the S&P 500 daily AD line and the NASDAQ 100 daily AD line went above their 21 EMA signal lines respectively, so that's a good sign. And you can see the change over here for the NDXT. The uptrend line that I pointed out coming out of the bottom of the diamond pattern is at 5907.13, and the ROC 1 closed above its positive volatility line at 1.61. The positive volatility line is at positive 1.00. And the ATR2 jumped above its negative volatility line at 58.47 and is pointed up. So all that indicates is that it was a pretty large move for the last 2 days taken together, and that put it up above its volatility line, even though the ROC 1 is positive. So positive volatility is nonetheless volatility. And the PPO extreme went back above zero. It's at 1.13. And I changed the target to the downside here from the target. I thought that downdraft might make it below 3,900 and nail this 3887 area, but it didn't, so I just changed it to the daily horizontal support now. So now there's 2 of them in the same vicinity, so you can consider that a support zone. And the S&P 500 12-month forward PE ratio is staying right around 18. Last week it was 17.92. This week 18.01. Same thing with the S&P trailing 12-month PE, still right around 18. This week 17.80. Last week 17.82. And the New York traditional McClellan breath oscillator to get back to zero would require 374 advancers over decliners to get back above zero. Quite a jump up from 2184 from the other day, Friday. Have a great day.